Hey, it's Mark Ferguson and welcome to another one of my real estate videos. Today I saw some data that showed that new construction might be higher than what it was before the crash in 2008. So I had to check out some of this data, see what I found, and see if that is really true or not, because some people are saying if new construction gets much higher than it was in 2005, 6, 7, it could indicate we're in for a crash here soon because of oversupply. So I checked out some data. I've got some amazing charts to show you here on what I found, and we'll see if that's really the case or not. A lot of people have been talking about real estate crash coming up, and I have my opinion on that many of you might know already, but I'll share that here too. And I love looking at the data and all of the data, not just little snippets of data, to show the real picture. So we'll go through that here soon. Of course, check out investormore.com on much more information on flipping, rental properties, be an agent, all of that great stuff. I have a free book on there as well. And we love the likes, comments, and new subscribers. So welcome if you're a new subscriber. And let's see what I'm talking about right now. All right, so here's the chart that shows new construction is higher than it was in 2006. This is Fred St. Louis data, National Bank, amazing data, all kinds of stuff here. But sometimes it can be a little tricky figuring out what they're saying and what they mean. So right here you can see it is showing there are 15, well, I think that's 1.5 million total housing units under construction. And that's important, units under construction. And then in 2006, there was 1.4 million houses under construction. So we're going to take a look at that, but it's interesting right here. We'll come back to this. There was way more in 1973 than there was pre-crash or now. And even in 1979, there's almost as many as well. And this is back when, right, there was much smaller population in the United States, and there was no crash here. These are recessions right here, but there weren't real estate crashes. In fact, we saw almost no decline here. There was a little tiny decline right here, little tiny decline right here, almost no decline here, and then the big crash right here in real estate. So again, recessions don't always mean crashes either, which a lot of people tend to say, and that's simply not the case. But we're going to look at some other charts here too. All right, so I can go to the Fred economic data and see all kinds of different charts for new construction. And that was just one, and that was the only chart I could find that showed new construction was higher than it was before, and it was just houses currently under construction. So if we looked at new privately owned housing units started, here we are right here, 1.7. It was 2.2 at the peak in 2005. And again, it was even higher in the 70s. There was much more building going on in the 70s. So something to consider, like I said, there is no crash here. Just because there's a lot of building doesn't mean there's going to be a crash, right? You can have lots of building and then less building and more building and have steady prices. Now, if you couple lots and lots of building with absolutely horrible lending guidelines, then yes, you can have a crash, and you can see that here, what happened here. And this is just new starts, it's not prices. But you can see, for housing units started, we are still way below those, and pretty much right around average. If you want to, take a guess on where that average number is, we're basically at average for building starts after being at record lows for many, many years. So we have more charts, authorized in permit issuing places. Again, that's lower. I don't even know exactly what that means. Just authorized permits hasn't actually started. Here we can look at single family, which is interesting. The charts before were for multifamily and single family. This is just single family. Look at this. 1.1 million single family homes started. 2005, 1.8 million. We're way, way below. We're way below actually most time in the last 50 years. And understand, this is when the population was so much smaller. This is why there aren't enough homes right now and why we have such a massive shortage. Here's another one to look at, which is completed. So new construction completed homes. That's pretty important to know what's on the market, what's been done, what's sold. Again, look at this. 1.4 million, and pre-crash it was 2.2 million. Way below. And again, this appears to be even lower than the average from the previous years. So it's very misleading to say that they're building more houses now than they were before. There are more houses under construction. And that could be because of the economic environment right now, where it takes so long to get materials. It's hard to find labor. It takes a long time to build houses. So we aren't building more houses. There's just more houses under construction at the moment because it takes so long to complete one. And you can see back here, so many more were completed in the past than were completed right now. Here's an interesting one too. This is 5 units or more. And so this kind of can show us, hey, there are actually more apartment buildings being built now. This is units started than pre-crash, right? But not in the 80s they built more. In the 70s they built a ton. They built so much in the 70s, and what's interesting is interest rates were absolutely going bonkers in the 70s. We might show that to you here real quick. And prices almost tripled in the 70s, and building was going crazy. All the things people will tell you now will cause a crash happened in the 70s, but there was no crash. Prices just kept going up. Here's another interesting one. Housing units authorized but not started. So these are houses that have been permitted, said they can start, but they haven't actually been started, and that number is higher. But again, we're looking at 273,000 homes out of, what was it, 1.6 million under construction. So it's a very small number. It's not this massive number just sitting there waiting to be built, but there is a lot just waiting there to be started, but they haven't started yet because of what has happened economically, COVID related, supply chain related, all of that. Back here we saw lower numbers because people could just build. It was much easier, not nearly as many government restrictions. Now people are just waiting. Again, back in the 70s, like they went on a building craze back then. I didn't even realize how much they built back then until looking at these numbers. And here's another really interesting one, because this is units under construction, that one number that showed it was higher than 2006, but it's for single family units only. So if you look at this for single family units, it is still much, much lower than it was back in before the crash there. Interestingly enough, it's still lower than the late 70s, but higher than the early 70s. So it's kind of interesting. A lot of that units being built in the 70s were multifamily. Still more houses than now, but a lot of it was multifamily, not single family houses. And again, we'll show you some charts here to show what prices did. All right, so here we can see the chart that shows median sales price of houses sold in the United States. So yeah, in 1965, you could buy a house for $20,000. Not anymore. But here we have the start of the 70s, 22,600, and we saw all that crazy building and all of that interest rates we'll show you here soon. Look at prices. They went up to a tiny dip here, 64, again, 64 in 1980. They went from 22 to over 60,000 in the 70s. With almost no crash, a tiny little dip. And this is a tiny little dip here we talked about. Again, tiny little dip here, almost no dip there. Then we have the crash, but these are recessions again. And you can see the 70s had massive building, massive interest rate increases, and a steady increasing housing market. All right, here's another chart. I want to show you the last one, and that's mortgage rates in the United States from 1971 to now. And it's very important to distinguish mortgage rates from the Fed discount rate. You keep hearing about how the Feds are going to raise rates. That's not mortgage rates, right? They are different. The federal government raises discount rates to try and control inflation, boost the economy. They try and lower rates. And mortgage rates sort of follow them, but not exact. So I've heard other people say, hey, rates were increased right before the last crash, and those high interest rates caused the last housing crash. The Fed increased rates, but look at mortgage rates. They actually dropped, right? From 2002, 2004, they dropped, and then they stayed steady. They went up a tiny bit, but there was no massive increase in mortgage rates. Mortgage rates were virtually the same. Then the recession hit, the economy crashed, the rates lowered, and here they are now, still record low rates. It's crazy how low they are. But what's really important is the 70s. So we don't show before 71 here, but they were a little lower right here. And look what rates did here. Just jumped. Over 12% by the end of the 1970s. Then they jumped up to 14%, 17, 18% in the early 80s. No crash in real estate prices. There's a tiny blip right here. Then they started going back up again. But rates increased significantly in the 70s with no real estate crash. So the idea that interest rates will always cause prices to go down isn't always true. This idea that they're building tons more houses now isn't true. And the idea that a recession always causes prices to go down, maybe a tiny bit, but they do not cause crashes. So really, what we're looking at right now is way too little houses for sale, amazing interest rates, and technically houses in the United States are still much more affordable than most anywhere in the world if you base it on wages and interest rates and the different things going on. And that has created this market where prices keep going up and up and up. And the only time we've seen crashes before, there's been 4 crashes in the history of the US, the 1930s, 2008, 1870s, 1830s, was massive overbuilding, not just a tiny little bit of building, but massive overbuilding coupled with absolutely horrible lending guidelines. And right now, lending guidelines are actually the strictest they ever have been in the history of the United States. So that's why I say I don't see a crash coming, and it wouldn't surprise me if prices continue to go up either. All right, so as you can see, most of the data shows that new construction is actually much lower than it was pre-crash, and even lower than it was in the 1970s, where there was no crash at all. So there is one little data point that shows it's higher, but again, that can be skewed greatly because of the current economic situation we're in, COVID, all of those things going on. So again, I don't see a crash coming. I don't really even see a downturn coming, although nobody can predict what will happen in the future. There's just not enough houses for everybody out there, and if there aren't enough houses, there's really no reason prices would decrease. The only time prices have really decreased in the past is when we had massive oversupply and horrible lending, and everything came crashing down, and the opposite is happening right now. All right, thanks for watching. Love seeing the comments, likes, shares, keep those up, and we'll be back with many more videos coming up here soon.